And we have some breaking news. New data shows inflation cooled more than economists expected in February. The Labor Department says the consumer price index ticked up 0.2% from January, putting the annual inflation rate at 2.8%. The report comes ahead of the Federal Reserve's next decision on interest rates next week. And after another down day on Wall Street, now we're seeing stock futures rising before the opening bell. Let's bring in ABC News business reporter Alexis Christoforous for more on all of that. So, Alexis, what does this inflation report tell you?
Diane, this is the first full inflation report under the Trump administration. It reflects February, but doesn't really capture the tariffs that have really sent the stock market into a tizzy. So this is encouraging news, at least news that won't add to the selling on Wall Street, at least for today. The fact that inflation cooled off a little bit. It slowed in the month of February, still up 2.8% from a year ago and still above the Federal Reserve's target of 2%. When we break down this report, we see we're still paying more for the basics. Food prices up 2.6%. Shelter, which includes rent, up 4.2%. Off its highs, but still at a high level. We did get some relief at the gas pump. Gas prices down more than 3% year over year. And we also saw used car prices up about 0.8%. And we've been talking about how car prices could move higher after these steel and aluminum tariffs go into effect. And then, of course, if they go into effect in the full-blown way, April 2nd, against Mexico and Canada, our biggest trading partners and trading partners that deal a lot with autos and the U.S. Diane.
So, Alexis, what are you watching for as the market responds to this latest round of tariffs now in effect?
Well, look, this is probably going to give us a bounce today. We're seeing stock futures higher at the moment, but this really doesn't tell the full story. That March inflation report will capture these tariffs in a bigger way. And we do have that Fed meeting you mentioned next week. Most economists expect the Fed just to stand pat on interest rates while they, too, try to understand what these tariffs are going to mean for the economy in the longer term. But we could see a temporary bounce in the market, and that would definitely be a welcome reprieve since the market has now having its worst days so far this year.
And Alexis, the European Union is responding with its own tariffs on American goods. Where could Americans feel that most?
Yeah, so we're starting to get those retaliatory tariffs, right? We're expected to hear something from Mexico over the weekend. But in terms of the EU, they're slapping $28 billion worth of U.S. products with these 25% tariffs, including motorcycles. So think Harley Davidson, boats, Kentucky whiskey. While this may not raise prices initially for U.S. consumers, it is going to hurt those U.S. companies that produce those products and export them to European countries. Diane.
All right, Alexis Christoforous, thank you.